All right, if you think you've already seen the AI boom, I want you to think again. We're really just getting started. See, 2026 isn't just another year on the calendar. It's the beginning of the AI revolution's second act. And get this, for every single dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of the tech world. This, my friends, is where the real money is about to be made.
And it all kicks off with this absolutely staggering number, $700 billion. That's the projected capital expenditure, the capex, from the top hyperscalers, the giants like Google, Amazon, and Microsoft. And that's just for 2026 alone. This isn't just a budget item. It's the largest infrastructure build-out in human history, and it's all laser-focused on one thing, AI.
So this massive wave of spending signals a fundamental shift in the market, what we're calling the AI reset. You see, the days of a company just mentioning AI on an earnings call and getting a stock bump, yeah, those days are over. The market has moved on.
That's exactly right. The entire narrative has changed. We've officially moved out of the pilot and hype phase and squarely into the operational and monetization phase. And the really critical thing to understand here is what this means for investors. Wall Street is no longer impressed by just potential. They demand proof. They're looking for real, demonstrable earnings, expanding cash flow margins, and cold, hard revenue that's directly tied to AI.
Okay, so if the game has changed, how do you win? Well, you focus on the constraints. And that brings us to the core thesis of this entire breakdown. The real money, the serious money, is made by investing in the bottlenecks of the system. Now, to understand the bottleneck, you have to understand capex. But forget the complicated financial definition for a second. I want you to think of it like this. Capex is the massive war chest tech giants are spending to build the digital highways, the power plants, and the factories for this entire new AI economy. It is the ultimate picks and shovels play in a modern gold rush.
In this blueprint right here, this is our roadmap. It shows exactly where all that money is going. We're going to use this to guide us. As you can see, it's all broken down into layers. At the very bottom, layer 1, you've got the foundation, the compute and infrastructure, the hardware backbone. Then as you move up the stack, you get to memory, and then finally to layer 3. That's where all that hardware gets put to work in software and monetization. This is the new AI value chain, from silicon all the way to software.
And this is the crucial point. If you remember one thing from this entire explainer, make it this quote right here. The game is constantly changing. A few years ago, the bottleneck was just pure compute power, getting your hands on enough GPUs. But as we solve for that, the constraint just shifts. Now it's moving to memory, to networking, and, believe it or not, to sheer power and cooling. The money always follows the bottleneck.
So let's jump into layer 1 and see how this all builds out. It all has to start with the hardware, right? The physical foundation of AI. And in this kingdom, there's one undisputed king, and then there's a whole lot of challengers fighting for a piece of the pie.
I mean, just look at that. That chart says it all. NVIDIA isn't just a market leader, they basically are the market. With an 81% share of AI chips, they are, for all intents and purposes, the central bank of the entire AI revolution. Their GPUs are the gold standard, period. And the numbers, they're just staggering. A 73% year-over-year jump in revenue. They control 92% of the data center GPU market. And get this, their profit margins are over 50%. This isn't just a tech company, it's one of the most profitable enterprises on the entire planet. And even with all that, analysts still see a 37% upside from here. Wow!
But let's go back to our bottleneck thesis. As that constraint shifts, new players start to emerge. Take Broadcom. They're cornering the market on custom chips, what are called ASICs, for giants like Google, and their AI revenue is growing at a blistering 106%. And as these AI models get bigger, they get thirstier and thirstier for memory. And that's where a company like Micron comes in, with its cloud memory sales jumping nearly 100%. You see, they're all solving different, but equally crucial bottlenecks.
Okay, now all this hardware, this massive infrastructure build-out, it's all being done for one single purpose, to run the software that is going to change everything. We're moving up to layer 3 now, where all that capex spending finally turns into recurring revenue and real-world applications. And the key trend to watch here is something called agentic AI. We've moved beyond generative AI, which just, creates content. Think of it like this. Generative AI is like a calculator. You ask it a question, it gives you an answer.
Agentic AI, on the other hand, is like a personal accountant. It doesn't just answer your questions, it plans, it reasons, and it executes complex, multi-step tasks all on its own. It's basically the difference between a tool and a teammate.
And the market for this is absolutely set to explode. What's an almost $11 billion market in 2026 is projected to become a $93 billion market by 2032. This, right here, is the software supercycle that all that hardware is being built for.
So this brings us to a fascinating debate for the future of AI. Who really holds the ultimate advantage in the long run? Is it NVIDIA, the hardware king with its near monopoly in that deep software moat called CUDA? Or is it a cash-rich powerhouse like Alphabet's Google, which can just fund its own massive build-outs, design its own custom chips, and has a core business that basically prints money? It's really a classic battle of established dominance versus strategic endurance.
And then, of course, you have the monetization specialists. Microsoft is just brilliantly capturing corporate AI budgets, embedding AI into every single product they have, and watching its cloud revenues soar by 40%. But on the other end of the spectrum, you have a pure-play software bet like Palantir. Its AIP platform is driving an incredible 70% growth in its commercial business. It just goes to show you that specialized software can carve out an incredibly profitable niche in this new world.
So, we've covered the AI reset, the bottleneck thesis, the hardware kings, and the software engines. How do we put all of this together into a clear, actionable strategy for you as we look ahead to 2026?
Here are the 3 crucial takeaways. First, you've got to focus on the infrastructure leaders, the picks and shovels of this gold rush. Your NVIDIAs, your Broadcoms, they are still absolutely critical. Second, watch the software monetizers like a hawk. Track who is actually turning all this spending into real, measurable earnings, your Microsofts, Googles, and Palantirs. And third, always be on the lookout for the next bottleneck. The smartest investors are already looking past chips and toward power, cooling, and high-speed networking.
And all of this brings us to the final, critical question. A multi-trillion-dollar digital economy is being built from the ground up, right now as we speak. The blueprints are out there, the money is flowing, and the foundations are being laid. So the only question left to ask is, are you positioned to own a piece of it?